Hey all, it's rare I get really excited about a project. Last two times I got really excited was Solana and Chainlink, and today we're going to analyze Aave. So I know many of you have been asking this for a long time, but here it is, and it looks good so far. So channels about math, money, freedom, welcome in and enjoy the show. And of course, this is edutainment. This is not investment advice, so please do your own research. Anyway, as usual, we will go through our 10-point valuation process, starting with what it does, how it plays, industry disruption, value props, technology and developers, tokenomics, ecosystem, growth and longevity, risks, and price prediction, the best part, and where we are today and everything else. So make sure you stay to the very end, and there's timestamps below as well. So let's jump in and blast through this real quick. So Aave is a decentralized lending and borrowing platform built on Ethereum. One of the reasons I love Ethereum. And it is extremely simple to use. You just need to connect your Web3 wallet, such as Metamask, and you can borrow crypto by putting up collateral, or you can lend crypto and collect interest. And basically it also works across 25 different ERC20 tokens. And the real beauty of this is there's no sign-in, no know your customer, no credit checks, and lending and borrowing is permissionless, anonymous, and transparent. This is the reason why I am so passionate about DeFi. If anybody's ever gone through the pain of trying to get a mortgage or a car loan, even some types of insurance, it is painstaking. The world has changed, and this is the future, I believe. So first of all, what is Aave? Aave is the Finnish for ghost, and the Aave Protocol is a fully decentralized autonomous organization, DAO, D-A-O. And the governance model is basically used by the holders of Aave, and they are incentivized to safely manage and develop the platform through voting and staking their tokens. So that is very important to know. Now, simply put, it's a bank. It's like many of you know some of the crypto banks like Celcius and Blockfi, but this is completely decentralized. And what it does, you walk in with your little Web3 wallet and you can make a deposit and you can earn interest. Or you can walk in with your web wallet, put up some collateral and borrow against it. And we'll walk through some of how that works as well. So super interesting. Now what it does is real simple, but basically you have your Aave holders and your Aave markets. Then you have your safety module, which is really cool, and we'll talk more about how it works and regulates. You have your reserve and your incentives for liquidity providers, and all of that works hand in hand and very, very well together. So one of the other cool things we will jump into here is the background. Now this guy, Stani Kulechov, is actually a really cool character in many respects. I've watched a couple of videos of his, and he seems like a very well-grounded person. He's a serial entrepreneur. He has a degree in law school, which is fantastic. And it's the first tech guy that I know in this space that has a degree from a law school. And he has been involved in blockchain since the beginning of time, pretty much. And his goal, his vision was to create a transparent and open infrastructure for decentralized finance. Sounds so good so far. So let's talk about how it plays real quick. Unlike traditional lending, Aave has no centralized entity to facilitate lending and borrowing. It is completely decentralized, which is its beauty. And the protocol creates the markets that let borrowers put up collateral to borrow from the liquidity created by the lenders. And it's self-balancing and regulating, and that is really cool. One important thing to note is borrowers must always be above the collateralization threshold in order to avoid liquidation, and we'll chat more about an actual use case in a minute. Now, where do they rank? Aave, you can see here from the screen, they are currently ranked number 28 of all players, and they are bigger than Maker and Compound and some of the other players down the line. Cream Finance ranked number 288, but you can see they are the top in terms of market cap, which is good. Now, in other areas, what industries can they disrupt? Obviously, when you look at the value locked up in DeFi lending, Aave has about a 30% dominance, 25 to 30% depending on the day. And their total value locked in, depending on the platform you look at, DeFi Pulse, etc., is about $25 billion across a few different protocols. And that's that. So let's talk about industry disruption real brief. First of all, they are the number one in value locked for all DeFi players, above Compound and Maker, with, according to this platform, about 9.85 billion locked in. And of course, this varies day to day, situation to situation. And also, as the volatility of the crypto market varies, so does the amount of value locked in too. So let's talk about growth opportunities. Aave is an automated market maker, AMM. You'll hear that term a lot if you're in the DeFi space. And it's a system that provides liquidity to the exchanges that operates through automated trading. Now, the growth opportunities, they see decentralized lending as a massive opportunity. 17 billion has been locked up at Aave between version 1, version 2, AMM, and the new Aave Polygon relationship that just started in June 2021. And the whole platform is up from just 200 million less than a year ago. So it is truly an exponential rise, and all-time borrowing has gone up to about $5.5 billion from about 1 million a year ago. So this space is growing very rapidly and escalating. So let's talk about value propositions. What makes Aave special? First of all, we covered it. Decentralized permissionless borrowing and lending. Lenders deposit cryptos and Aave earn interest on it. And anyone can get a loan from anywhere in the world. No paperwork, no credit checks, no KYC. It's almost hard to believe. Open sourced, fully transparent lending and borrowing. Rates are market determined to self-regulate the whole platform. Now, as far as I'm concerned, the secret sauce to this whole thing is stakeholders, the people that regulate the mechanism. They can lose 30% of their stake if something goes wrong with the protocol. And that enforces a lot of discipline to make sure risk is managed throughout the entire protocol as well as we go forward. So value props, what's cool about this? One of the things that really is mind-blowing when you're used to traditional financial services, you could deposit something like Polygon Matic on Aave and earn 5 or 6% depending on the day. And at the same time, you've got your collateral there. You can withdraw USDT or USDC against your Matic and use that to buy a car. And in the meantime, you continue to earn on Matic that's deposited. Now remember, there's always a risk that if you're not collateralized fully against a drop in the underlying asset, for example Matic, in this case, you could get liquidated. So bear that in mind. Never borrow your full collateralization load, but manage your risk very carefully. And there's a cool website that helps you do that as well. So bear that in mind. But just think about that for a second. You deposit crypto, you earn interest in that crypto, and you borrow against that crypto to buy an asset with USDT, which you convert into dollars or whatever currency you want. It's just mind-boggling, and you wonder why traditional banks are nervous. Well, this is one of the reasons why. So let's talk about the technology and developers. So Aave is at the cutting edge of decentralized debt instruments. The over-collateralized loans, borrowers must put up collateral that is more than the amount that they are borrowing, like I mentioned before. Now, flash loans are also possible. These are uncollateralized loans that can be borrowed and repaid in one transaction, allowing arbitrage to execute swaps without having principal. And this is one of the areas that's caused a little bit of consternation in the space. These flash loans have sometimes been used to pull money and bankrupt systems, so beware of that too. But at the same time, it's pretty neat. One of the cool things about flash loans is though it removes all arbitrage opportunities out of the market automatically. And collateral swaps allows borrowers to swap the crypto collateral and borrow against it, like we discussed. But it also helps stabilize collateralization when the value collateralized crypto suddenly falls. Now, on that note, technology and developers, debt repayment with collateral allows the borrowers to use the borrowed crypto to pay their loan back. And uncollateralized long-term loans borrow crypto with no collateral, made possible through credit delegation. Third party takes on the default risk for an interest and by putting up the collateral. So some people ask as well, one of the things I always like to see in a platform is there a moat? And this was super interesting, and some cool words came from Stani, the CEO. And basically, he said, since the code base is open source, anybody can download it and improve upon it and make a better one. And it's the same thing for liquidity. The platform with the best user experience, the best liquidity will win the day. So it's important for him and his team to always stay ahead of the market and keep on innovating all the time and make sure the development team is open and allowed to be creative. So I thought that was very positive. One of the reasons I really like Stani. And there's a couple of other reasons too, which I'll get to right now. Tokenomics. So this, jump back for a second. As far as I'm concerned, this has the most robust of all tokenomics, probably almost even on par with Bitcoin to some extent. It's not inflationary like other platforms, because the yield comes from assets that are lent in it. And there were a total of 16 million Aave tokens, of which about 12.5 million are in current supply, with the remaining 3 million owned by the founding team, which is very little compared to other platforms. And the level of decentralization is certainly encouraging when compared to Compound, for example, where 50% of the tokens are still owned by the founding team and investors, and there's not this constant issuance of tokens as well. Also, the inflation rate is about 1.2%, which is less than Bitcoin. And if you stake, you can get 5%, but currently only about 22%, I think, of Aave token holders stake their token. And this is in comparison to about 49% with other companies such as Curve DAO. So let's jump into the tokenomics, see if I missed anything there. Again, 60 million tokens, 80% went to the community, 20% went to the treasury. Not all are issued. Inflation rate 1.5%. Now, one of the things as well as important to know is in the event of a major black swan, staked Aave could act as insurance to protect the network, and stakers could have a 30% haircut in the event that it needs to be pulled on. But that's just par for the course, and that's part of the benefits of this actual platform. Now, in terms of the ecosystem, they offer loans on 25 different ERC20 tokens like USDC, WETH, Chainlink, Maker, etc. And they recently launched on the Polygon network, and within a very short window of time, over $5 billion was deposited, which is huge considering the speed at which it happened. Now, in terms of longevity, it was founded in May 2017 as EthLend. They raised $16.5 million as an ICO, and in August 2020, Aave raised $25 million from its Series A with venture capital backers 3 Hours Capital, very good shop actually, Framework Ventures, Parafy Capital, and DTC Capital. I only know 3 Arrows, the other guys I don't know, but they were a good venture capital fund. And EthLend widened its lending offerings and rebranded to Aave by September 2018, and their mainnet launched in January 2020. So it's relatively new, and that's when they switched to a staking model as well. So a couple of things, just to, again, touch on risk. They did survive Bloody Wednesday without a scratch. So the reason I mentioned Bloody Wednesday is this was the crash that happened very recently where Bitcoin fell 30%. And when people overextend themselves by up to tens or even hundreds of times beyond the value of the collateral they post, it can bring down certain lending organizations. And while some crypto exchanges such as Coinbase and Binance buckled under the mayhem, the DeFi players like Uniswap and Aave had no issues whatsoever. And this was considered a tremendous stress test for this DeFi platform, which was cool. And as you guys know as well, when you have big dips like this, a lot of collateral is unwound, a lot of people are liquidated, and that causes the underlying assets to collapse, and that value vaporizes, causing more positions to be liquidated. And as Bitcoin and other cryptos get offloaded into the market, the price drops further, and it's a wealth-devouring feedback loop, self-reinforcing downward spiral, and Aave and Uniswap had no problems at all during this time. So that was a big thumbs up, and that was a pretty brutal test. So good sign. Now, in terms of risks, we always have to cover risks. The vast majority of liquidity comes from centralized stablecoins, like USDC, WETH, WBTC, and Tether. And that can be a problem. If anything ever happens, if Tether blows up, that could have an impact on this platform. Also, the abundance of lenders who want to earn interest, but borrowing seems to have plateaued over the last month. And that might be because of the weakness in the crypto market. Also, liquidation and slashing, Aave could be extremely risky in the event of a black swan event. Again, if things tank down to zero, there could be mass liquidations, triggering big losses to the actual token. And the final point as well, ETH 2.0 may have scalability issues, which could prevent the growth of Aave as we go forward, but I think that should all be dealt with and shouldn't be a problem. And even working together with things like Polygon, you can actually run transactions in a matter of seconds with the combination of Polygon and Aave today. So it shows you even with the older version of Ethereum, it's still very scalable and very, very fast. So that's good news. Now let's look at the chart. This is very interesting. First of all, we are back at January 18, 2021 levels. The 200-day moving average is about 320 and the 50-day moving average is 380 bucks. And the RSI has bottomed 3 times over the last 6 months or so. Basically the end of Feb, the middle towards the end of March, and again today. Today is the lowest RSI level I have seen this year, and we all know what that means. It means it's oversold. So basically the point is Aave at 200 bucks, not investment advice, but it's a good price. So let's look at price predictions. As usual, I walk through all the price predictions from all the usual players: CP Forecast, Trading Beast, Digital Coin, Ripple Forecast, Long Forecast, Walter Investor, and Crypto PP. Now, I take some of these forecasts with a grain of salt, and I remove the ones that I think are just completely beyond the realm of feasibility, and I keep the ones that are more conservative. So if you look at Wallet Investor, they have a $4,800 price prediction for 2025, and Crypto PP have a $6,300 price prediction for 2025 and $12,500 for 2030. I think this basically would assume, let me zoom out here for a second, it would basically assume that Aave would run all kind of DeFi crypto lending, or maybe the whole banking industry would implode and everything would be kind of on the blockchain. That's also theoretically feasible, but they were too high for my liking, and I prefer to sandbag a little bit and err on the side of conservatism. So CP Forecast had some interesting price predictions. If you average up all the price predictions for 2021, the average is about $669. 2022, it's about $1,000. And 2025, about $3,000. And that's including some of the high numbers. But I think a more reasonable estimate for 2025 would be more along the lines of about $1,200 or so. And 2030, we have everything from $1,300 all the way up to $12,000. So again, take those all with a grain of salt. They're all very bullish and very unreasonable. But I put together my own model, which is taking into account a couple of different things. Number one, the market cap. I believe Aave could be a top 10 market cap. Also, I compared it to other traditional businesses and took into account all of the different tokens available. So I came up with different market cap numbers of maybe a $6 billion market cap year end 2021 if we hit a bull market, and that would take the price up to $465. 2022, $644. 2023, $791. 2024, break $1,000, and 2025, $1,231. And the year 2030, again, more conservative because we don't know where this whole space will go. We don't know how many competitors they're going to be or if they're going to be around. So it's really difficult to project out 10 years. But I did come up with a price for 2030 of about $2,169. Again, conservative is using very conservative growth from 2025 onwards to come up with these numbers. Now, the other key factor to look at here in my numbers is the multiple of where we are today. So to get to my year-end price, Aave needs to go up 2.3 times. To get to my 2025 price, it needs to go up 6 times to $1,231 because we're at $200 today. And 2030, it needs to go up nearly 11 times, which is, again, for some crypto investors, 11 times in 9 years isn't very exciting, but for more traditional investors, it is super exciting. So very, very bullish on the project. And let's talk about the conclusions real quick and we'll wrap up. So first of all, it's one of the most disruptive DeFi projects. It's leading the space for decentralized lending. And it's changing the way we think about what's possible with crypto lending and borrowing. It's very innovative. I love the permissionless loans, no KYC, no nothing. And everything can be done securely and transparently. It has seen explosive growth since launch. Borrowing activity has tapered off in the recent month because of weakness in the crypto market, etc. It's obvious. But it might be very risky to hold this during a black swan event. Liquidity-driven market shocks could send Aave spiraling. Very important to be aware of that. But barring any black swan event, the future is very bright, and I see this as having potential to be a top 10 crypto over the next 1 to 2 years. I really like the team. I like their methodologies. I love the tokenomics. I love the simplicity, the user experience. They're doing all the right things for developing a platform. So big thumbs up from me. Hope you guys like this. Big thanks to everybody on Patreon. I know you guys are looking for this as well. And if you like it, hit the like and subscribe. Thanks all.